Hi everybody, thanks for joining us for the latest update on our livestock markets. I'm Coulter Brown from the Northern Ag Network. First off, gotta say sorry for being a little late with this video. Got kind of tied up between convention coverage, speaking engagements, second grade basketball, just life. Things have been busy, but boy, they've sure been busy in the cattle markets too over the last couple of weeks. Of course, trade and tariffs dominating a lot of the conversations, but this hot cattle market certainly making ranchers excited for what the next year or a couple of years could hold for us. We're going to try to dig into all the things that are driving this market, but first want to thank one of our sponsors, Nutrilix. With calving season getting going here, Nutrilix liquid supplements can provide whole herd health while reducing that calving stress on your herd. Get more out of what you already have with liquid supplement delivered to you by your trusted local dealer. Give those calves a head start before they hit the ground, all while eliminating another stressor from your plate. Well, all anyone's been able to talk about the last couple of weeks is the tariff situation. Of course, Canada, Mexico, China, the U.S. is definitely putting some tariffs on them or putting them out there with President Trump in office now. At this moment, no tariffs are in place on Canada and Mexico, but that could ramp up again once we get to April. Of course, tariffs have been increased on China, and China's retaliated on U.S. beef, so it's created an uncertain situation. All in though, the cattle market has really handled it all pretty well. As we look at what the feeder market's done here over the last month, we were at record highs there at the end of January. Then we saw a $10, $12 pullback in early February, but boy, then this market has rallied strong, and once again, we're talking at, near, or even new highs for a lot of these markets. Of course, watching the August feeder cattle, that's the high point for the year, and we're looking at north of 281 for those August feeders right now, pretty strong. Live cattle haven't found the same bounce back that the feeders have. They've certainly been working a little bit higher here lately, but also feeling some pressure from the cash-fed cattle trade that's limited how high they've been able to get. Part of the reason we've seen weaker cash trade is packers not near as active in that cash market. That's because they're reducing the slaughter pace. We've seen a big pullback. We're talking cattle processing down 30,000 head from where it was a year ago. Fed packing utilization, which if we're running 100%, that's complete efficiency. It's now dipping below 80%. So that's definitely weighed on that cash cattle market. $9 to $10 lower on the live sales, averaging right now about $200. Part of the reason we've seen packers able to back off that processing pace are carcass weights. We're feeding these cattle heavier thanks to the strong prices, but also lower corn costs. So that means packers don't need as many cattle to get the same tonnage of beef. Now, as we talk about beef, demand is still historically strong, but we do have a consumer that's battling a lot of inflationary pressures right now, so we have seen boxed beef move lower here over the last 6 weeks or so. Now, in the most recent cattle on feed report, did get a little bit of a bump there as the placement figure came in lower than expected, and that brought total inventory down slightly yet again. The March cattle on feed report is going to be very interesting to watch as we're hearing some potential for a big reduction in placements. I've heard talk of 10 to 15% lower, so that could really get the market excited. Certainly in 2025, we're expecting this trend of tighter cattle supplies to be a very common theme. Of course, last month we talked about beef cow numbers as low as they've been in the U.S. since the early 1960s. Fed cattle numbers down 130,000 head in feed yards. The feeder supply outside of feed yards more than 100,000 lower as well. A record low outside feeder supply. So that's going to continue to support these prices, certainly across the board, but mainly on these feeder cattle. And as prices continue to test all-time highs, there's a clear economic signal for ranchers to grow their herds. But also there's a few things giving them caution. Of course, the main driver here is going to be the weather. We have to have the grass to be able to seriously grow these numbers. You compare back to where we were a year ago at this time, we've seen some areas improve on drought conditions. Central Montana looking a lot better after all the snow, but a lot of areas through the high plains, South Dakota, Nebraska, down into the Texas Panhandle, definitely seeing drought conditions continuing. And as we look forward into the spring where our critical moisture is, that's where the NOAA seasonal drought outlook says we could stay dry in a lot of areas. So it's all going to depend on the right moisture at the right time. Of course, we've had a lot of talk about trade here lately with Canada and Mexico. Of course, they're two of the top 5 markets for U.S. beef, and of course, we see a lot of live cattle trading as well. In the case of Canada, we send them a lot of feeder cattle, they send us a lot of fed cattle, and for Mexico, they're primarily sending us feeder cattle. But it's important because of the amount of beef that we send them. Also, you think of the ranchers in northern Montana. A lot of those calves from Montana end up going north to be fed. Some of them come back to be processed, and of course, we're sending a lot of barley north as well. So these trade relationships are very interconnected. As we think about beef imports, January was a record high beef import for the U.S., most of that coming from Brazil, Uruguay, and Paraguay as they were trying to get ahead of the Trump administration, knowing more tariffs are coming. In the first 2 weeks of the year, they filled the U.S. tariff rate quota. So now they're paying tariffs on that beef coming to the U.S., but certainly seeing a lot more of that. Of course, not unexpected when we have record high cattle prices. Now on the export side, 2024, the third highest beef export year of all time, and January exports did come in higher as well, but that's probably not going to continue through 2025. Really, 25, we talk about these tight supplies. We're going to have a record small calf crop this year, and that's going to really help to support prices. The thing to be watching are these heifers. Are we going to continue to send these heifers down feeding channels, or are we going to switch over to retaining more of them and growing these numbers? I was surprised to see replacement heifer numbers that were a little bit lower in the January cattle inventory report. I think we're going to start to retain more heifers, which will only help to support the price. So there's a lot of things to watch. I think we'll see a slower growth in the cow herd here over the next year, but not just the weather is going to slow that down, but also we've got high costs, higher interest rates, labor challenges for a lot of operations. So all that could combine to make it a slower growth of the cow herd than what we saw a decade ago in the previous cattle cycle.
Ranchers, caring for your livestock takes dedication, but fluctuating prices can put that hard work at risk. Marsh McLennan Agency can provide the protection you need. I'm Tori Johnson, Ag Risk Management Advisor for Marsh McLennan Agency, here to guide you through a livestock risk protection plan designed to ensure against declining market prices. LRP is available all year round and provides protection against the downside risk. Call me, Tori Johnson, at 406-209-2341. Again, that's 406-209-2341.
As we look at some of our most recent cattle prices, though, the feeder market holding in very strong. Maybe not record prices, but pretty darn close to it, especially when we think of 5-weight steers topping out at $394. Upper 6 weights in Dickinson, they average $319, and your light 5-weight heifers averaging $331. At Billings Live, we saw most of the feeders selling 6 to 12% higher, some very strong prices across the board. Moving to the weigh-up markets, of course, lean 90 trim prices at or near record levels, supporting prices there. We're not culling near as many cows and bulls as we did a few years ago, and so that's definitely supporting prices. Seeing a lot of the cows right now kind of in that 130 to 145 money, some pushing over 150, which, we're talking cull cows selling north of $2,000 a head. The bull market, strong as well. A lot of them that 165 up to 180 money, so a strong market there. Moving into the bred cows, though, boy, I think this is the high that market's at for the year. Of course, as we get deeper into calving, not as many bred cows on the market, of course, but exceptionally strong values. A lot of these bred heifers selling $3,000 to $3,500. The young bred cows, I think the high for the year is $39.85. We saw that in Miles City in February. So these prices continue to climb, and really when we're talking calf prices as high as they are, it seems like they could support those bred cow prices if we can keep the calf market strong for a little while longer. Now in the production sales, these bulls are coming in, easily 8 to 10% higher. Some of them 20, 30, 35% above year ago levels. The Oxbow Ranch had a great sale there at Wolf Creek, averaging $10,420. Clear Creek Angus at Chinook, they average $81.71. So strong prices across the board. Finishing up with the lambs, they were higher in February too, and I'd expect them to move higher as we get closer to Easter. That's definitely a big lamb buying time, especially as that ethnic market really shows up strong. 70-pound lambs selling mostly $230 to $250, 80-pounders $220 up to $240. A lot of demand for the slaughter ewes too. Vast majority of them right now selling for north of $1 a pound. So that's a pretty strong lamb market. As we wrap things up, I want to reference cattle prices outlook that they presented at the NCBA convention with some very strong prices. Again, they're saying the fundamentals will drive this thing in 2025 with tight supplies and strong beef demand. They say the cow-calf producer is going to get a larger share of the beef dollar thanks to that strong consumer demand. You can see where they think prices are likely to be headed this year. Feed yard's going to be supported by a packing capacity that's expected to increase a little more here in 2025. So strong margins should be seen, particularly in that cow-calf sector. Cattle Fact saying we're going to see more heifer retention this year. Does depend on what the pasture conditions are going to do, but they're also anticipating a slower herd rebuild, which could mean we see some good times in the cattle industry lasting for a couple of years. Well, thanks so much for joining us for this month's report. We'll have more on the cattle market for you here at the end of the month. Have a great day.